How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report as of September 4th, 2018. Here's the positions that the institutions held as of that date. And let's take a look at gold. So we know that the institutions have been aggressive with their gold positions, okay? And we know that by looking at previous data, every time the institutions were heavily aggressive with their shorts, eventually we saw a push to the upside. So we've gone through this before, and I made a post on the website regarding this. And if we take a look here, we can see that coloration of the cells are red and a big deep drop into the negative with a negative 13,000. So you can see how red that cell is, considering previous positions being so bullish. So this is very bearish for the institutions. But does that mean that price is going to move up? Well, I think the chance of that still exists. Just trying to time it is going to be very difficult. Now we go over to oil. We got that push upwards that I was mentioning, and we also got the institutions increasing their long positions in order to get price up there. As price got up there, they also increased their shorts from 104 to 107,000. Long exposure remains at 86%, and we're still very, very bullish. So I think there's a good chance that this might be the top where we start to see a drop in price. The Canadian dollar getting weaker would definitely help with having this unfold in that manner. So let's take a look at the US dollar. What I see here is an increase in longs and an increase in shorts, and that came as price dropped into that weekly area of demand right here. So we had that weekly area of demand, non 2-to-1, a lot of congestion to the left, and we got a slight increase in price from this area since. Okay, now this change in positions dropped the long exposure from 85% to 81%, and net positions also dropped by about 1,000. Okay, short positions are cooled off at this time, increasing, slightly aggressive still. I think what is in play here, because if you take a look here, they're cooled off and becoming aggressive. Over time, we're going to see this becoming even more aggressive, and you can see that a slight decline from the overall exposure, 85 to 81, so a slight adjustment in their positioning, but I believe over time we're going to see this number increase as well. Whether this is going to drop down here, I still think that there's a good chance of that simply by taking a look at this chart alone. But when you take into consideration what's taking place on the other charts, specifically the USCAD, US yen, US Swiss franc, Aussie, and the Kiwi, it's telling us a different story. Okay, it's leading us to expect something different from the US dollar, and I went into detail on that in the report. So let's take a look at the Aussie. What's taken place in the Aussie? So we knew price was testing deeper into this monthly area of demand, and considering what was taking place with the US dollar, I thought that there was a good chance we saw a rally. Instead, that did not take place. Instead, we had that zone taken out. So this may lead us to believe that the US dollar is going to start to get stronger from where we are at right now. Because typically one currency pair or two currency pairs will lead the rest of the markets. And we have to keep an eye out for signs of what's taking charge. Now we know on most of the pairs, price is at a weekly zone, and it's containing price at this time. But what we're seeing here is that we were in a weekly imbalance that got taken out, and then we had a weekly tested zone that got taken out. We were also in a monthly tested zone, and it got taken out. So is that to lead us to understand or to believe that we should accept a move to the upside on the US dollar? Because weakness in this one, weakness in the Kiwi, could potentially lead to weakness in the euro and the pound as well. So it's tough to say, but if we look at the data, last week I was saying that institutions are 69 1,000 positions to the short side. But because of the non-aggressive nature of their total positions, I said that there was a lot of room for them to add, and that's exactly what they did this week. They added shorts from 69,000 to 75,000. They also added longs, okay? And that came as price was dropping. So they added shorts, they added longs. Long exposure increases by about 4 points, and short drop by about 4 points. Bottom line is net positions still stay negative, roughly at the same level that they were at. This is going to present some good trading opportunities soon, and we are looking for them, and I posted in the report exactly what we should be looking for. But this one and this setup and what we see here is a very good example of what we're looking for in the markets when we're looking to put the odds in our favor of a trade happening. Alright, USCAD slowly becoming aggressive, cooled off on shorts. Right now overall sentiment is neutral. We have a reaction from that weekly area of demand, which I said I would like to take a long from. We also got a momentum shift to take place off of that weekly. So this is one of those key things I was mentioning to you that could lead us to believe that the US dollar is going to get stronger. And if we just focus on the data here, we can see that they were somewhat aggressive here, becoming less aggressive as price was dropping towards a weekly area, and now we're getting it to increase. Now if next week's data is an increase in long, and the week after that is an increase in long, that will really tell a story that the institutions may just be accumulating that long position down here, which is what I was expecting to see from them, but we don't know just yet. If we take a look here, they were extremely bullish. Now they're just bullish. It's hard to tell what's going to happen. Anything can happen right now. Either US dollar gets weaker and this drops, or it goes higher. But again, if you take a look at the daily chart, it's telling us that the institutions are making moves to push price higher. So that would make sense since longs are aggressive and shorts are cooled off. At the end of the day, that's what we see. Alright, so let's take a look at the US Swiss franc. Here's another one. You know, price is declining right towards that really nice area of weekly demand, nested at the monthly area of demand. And what do we see as prices declining? A slight drop in long positions from 50 to 48, and an increase in shorts, which causes the drop. Now, when you close longs, price drops. Okay, so that helped to facilitate this massive drop like this. What I'd like to see now is whether or not they're going to start accumulating a long position from these areas. And we'll have to wait, because right now we're getting consolidation, and next week's data is going to represent what's happening during their consolidation phase. So we could start to see that they are accumulating a big long position again, or not. One of the two is going to happen. I think there's a good chance that we're going to see them accumulating a long position, but I'll wait to see if that is exactly what will take place. What we do know is that they used to be neutral, and now coloration of the cells is bullish, and we're at demand. So this could potentially be a really good time to start accumulating a long position. I just want to see signs that the institutions are doing that, and once I do, then I will start accumulating my long position. Let's take a look at the euro. So this one here is price rallied right up deep into that weekly area of supply, and longs increased from 171 to 173, and we had a slight decrease in short positions. Bottom line, 51% geared to the long side, but overall coloration of the cells neutral, even though we've entered into a bullish territory with the net positions going from minus to positive. Bottom line is I'm still waiting to see how this reacts from here. There's a demand zone here on the daily chart still holding. If it breaks, lower. If it holds, higher. It all comes down to that. Okay? Bad time to be getting in, because it can either go up or down. I mean, we're in between zones here. Anything can happen. It's either down or up. Over time, it's going to be down, but in the short term, we don't know. So, waiting on the sidelines to see what takes place with this one. Pound, US dollar. So you can see they were cooled off, starting to become aggressive with their longs. Now I've been mentioning to members through the reports that we're hitting a really important spot, and I think over time the pound is going to be getting stronger. It's too early to tell right now what the institutions are doing, but they used to be aggressive, became cooled off, and now slowly becoming aggressive again. At the same time, shorts are still aggressive, but then again, they had to be because price dropped. If you look at the coloration of the sells, they're somewhat neutral, so we should be sitting on the sidelines even though net positions are in the negative. So that's what I'm doing. We're in between weekly supply, weekly tested demand. So anything can really happen at this point. If this is to be taken out, that'd be a great opportunity to get in some long positions, but that has yet to happen, so waiting on the sidelines for that to take place, or for it to go lower to new areas of demand down here. Okay, but looking at the position, still aggressive with shorts, overall positioning aggressive, so they got to start taking profits. I think they're going to be taking profits on shorts, causing price to go up. That's my thought, until something else takes place. Okay, US dollar, Japanese yen. Longs aggressive, even though they're less aggressive. Shorts neutral. Net positions in the positive. Neutral turning into slightly bullish. And that comes as price is sitting at that weekly area of demand, just like the USCAD. Okay, and just like the US Swiss franc coming into its weekly area of demand. So these pieces of the puzzle, when you examine them, they're leading us to believe that a strong dollar is going to be coming. And we know that the positions are aggressive with longs, right? So that also helps to support the idea of a strong dollar. Bottom line is bullish, somewhat bullish, bullish. I think it's safe to say we could start watching to open up a long position very soon. Kiwi, shorts, aggressive, longs, cooled off. Bearish, 72% net exposure to the short side. Net positions in the negative. As price was rallying up towards a weekly area of supply with a nested daily area of supply. There was a short signal that I gave out to members, and it triggered hardly any drawdown and has been working very nicely. And I got out of it early simply because of what was happening on the dollar. You know, woulda, coulda, shoulda. It all seems great afterwards, but the circumstances were such that it led me to believe there was a good chance that price was just going to rally higher. You know, if you take a look at the technicals, it was a perfect short, but sometimes you get caught on the wrong side and you just don't know what's going to take place. Considering the evidence happening on the other charts, it didn't look like this was going to be holding. The odds became less, so I got out, still at a profit, just not at the profit that I would have wanted to have if I had continued to hold on to the position. But anyways, you still learn from it and you move on. And if you take a look here, 72% bearish, it looks like things are really good for a potential short. You know, this one is very much in line with what we're seeing with the Aussie. Both Aussie and Kiwi charts are prime for shorts. So I think this also leads us to believe that there's a good possibility of the dollar becoming stronger. Bottom line is shorts are aggressive, still room to add, just like the Aussie. So we could see more downside in the next few weeks. Alright, that's pretty much it. Next week on Thursday, or this coming week I should say, on Thursday we have the Bank of England interest rates coming out, and also the ECB interest rate coming out. So that will put things into action. Alright, it'll be great because I really want to see what's going to happen with this euro. So that is it, ladies and gentlemen. I hope you enjoy the rest of your weekend, and until next time, take care.